This week, we saw the S&P 500 making another new all-time high. And there's a very important date that we need to focus on. And no, I'm not talking about August 1st because of the tariff deadline. Instead, now, one of the questions I want to ask myself, is this nothing more than a false breakout with the S&P 500, where we saw on Friday making another new all-time high? We've had this upper level consolidation, which we need to pay very close attention to. If you guys have been watching for the Fibonacci retracement level, we now had to go ahead and adjust the Fibonacci retracement up here just a bit to reflect the high that we saw on Friday. Now, before we discuss, is this going to be a failed breakout or not? Now, as we come over and look at the August 1st deadline, could it be that maybe Trump is not going to taco out this time? Trump delayed his tariffs again. This could be the last time. And again, they're talking about that August 1st deadline. And let me know in the comment section down below, do you think Trump will taco out come August 1st? Or do you think he actually means what he says this time around? And let's talk about why the tariffs might not be the only thing we need to worry about on this date. Because if we look right here, student loan bills could double for some borrowers as Biden era relief is set to expire. And this is going to take place on August 1st as well. But if we scroll down here a little bit and we look at the difference that some individuals may have to pay under the SAVE Act, you see the income bracket of $25,000, they had to pay $0. Income bracket of $35,000, they had to pay $0. But now under the new plan, $25,000 bracket, you have to pay $13. $35K bracket, you have to pay $96. And then look, the $50K bracket, under the new plan, you have to pay $221 versus what was under the SAVE plan of $62. If you're making $75,000, then now you have to pay $429 versus $166. In the $100,000 bracket, you'd have to pay $638 under the new policy versus under the SAVE plan, having to pay only $270. Now, why is this important? Regardless if you have a student loan or not, let's think about this. This is going to affect people's disposable income. Less disposable income, less money being spent. Now, if we come over and look at this past week, notice once again, we are still over an extreme greed. Can't stop, won't stop. The market only goes up. But I want to warn you, like a wise man once said, be fearful when others are greedy, be greedy when others are fearful. Now, if we look at the most recent investor sentiment survey, you can see this week we dropped down to 39.3 on the bullish side. The prior reading was 41.4. This is going to be 2 consecutive weeks where the bulls have dropped off a little bit and the bears have ratcheted up. You can see on July 2nd, the bears came in at 33.1. Then July 9th came in at 35.6. And now the latest reading, they've bumped it up to 39.0. So is the market getting ready to sell off? Let's not forget, it was just last week we saw this nasty bearish engulfing candle that got the bears all excited, said, this is it. Top 1, top 2, top 3. Here we go. We're going south. And that all had to do with Trump and Powell. Trump's been talking about maybe, just maybe, he needs to go ahead and fire Powell. And we see Trump was ratcheting up pressure, and he's been on Jay Powell's case for a while. July 8th, Trump calls on terrible Powell to resign immediately and tells reporters we should get somebody in there that's going to lower rates. Then on 14th, Trump describes Powell as a knucklehead and a stupid guy, citing frustrations over Powell's refusal to cut rates. We should be at 1%. But then July 15th, Trump calls renovation cost overruns at the Federal Reserve a fireable offense and says talking to Jay Powell is like talking to a chair. Then on the 16th, which is that day we saw that volatility in the market, Trump asked House Republicans during a meeting if he should fire Powell, and that's essentially what caused the market to come down right here on this day. However, it was Bissent that tried to dissuade Trump from firing Powell. And if you guys remember, I believe it was Bissent that actually told Trump, hold on, back up, let's not get carried away, and actually helped Trump capitulate down here at April, which put the low in the market and has allowed the stock market to rally to new all-time highs. Amazing deals out there. Apex Trader Funding, 80% off all evaluation accounts. My Funded Futures, 50% off first-time users. Tradeify, 35% off all accounts. Use promo code Mike. If you guys want to trade with a prop firm with the best payout policy out there, Take Profit Trader, right now, 40% off all the evaluation accounts. Best yet, no activation fee. Take advantage of these offers. Use the link in the description box down below. But now that we know we have August 1st, we have tariff deadlines. We have student loans starting to ratchet up. How much student loans are going to have to be paid back? But also, if we look at this chart right here, brought to us over by Wayne, we can see going into July 27th through October 27th is the most bearish time in the stock market. If we go all the way back to 1950, we can see we've been up 39 of those times. We have been down 36. That is the worst performing period of the market going back to the 1950s, at a time when we see the S&P 500 making new all-time highs. Now, if we come over and look at the SPY real quick on the weekly chart, we see we have a wick on the top. We have a wick on the bottom as well, kind of a hammerish looking candle. MACD on the weekly chart is still extremely strong. But if we do start to see a pullback, watch right here at this minus development area, right around the 614.48 level would be a logical target. Do we come down there, kiss it, and then start to run to make new all-time highs? Now, if that's going to be the case, are there any other warning signs out there? Before we look at the daily chart, let's come over and look real quick at the SPY versus HYG, high yield bonds. We can see that this week, SPY made another new all-time high. If you look at the HYG, it's trying to make it run up, but if you were to just basically draw a trend line from the high right over in here where HYG was to the current high, and if you correlate that with the S&P 500, we can see that we do have some type of divergence setting up at this point. We also want to keep an eye on the 10-year versus the 2-year yields. We can see once again we're back on the rise. As this starts to steepen, that normally is problematic for the stock market as well. Then we come over, look at the transportation index versus the Dow Jones. Dow Jones up here in the top chart, the transportation index down here at the bottom chart. Now we can see we have major divergence on the transportation index as well. You can see we broke out of this area right here, but if you correlate with the all-time highs with the Dow in relations to where we are now, the transportation index is nowhere near those highs like we saw with the Dow. Now, I would not be surprised if we do see the Dow still push a little bit higher this week, but is that going to be all? We have top number one, top number two, and the more times we continue to push on a level, the more likely that level will indeed give way. So as we come back over and look at the SPY on the daily chart, notice that consolidation level that we've had. One thing I want to do, I want to go ahead and grab and measure where would the measure move be if we go ahead and we continue to push up higher. That would give us a price completion at about 636.28. Then if we go ahead and we do that same measurement, but this time, what would be the target to the downside? If we just go ahead and assume that if we had this consolidation, we could go ahead and make that same move on the way down. That would bring us to about 609.32. And if you look at where that level is, that is also where the current 50% Fibonacci retracement level is. So if we start getting a retracement underway, the first area I do want to watch will be the 38% retracement. The second area is going to be the 50% level. Let's keep in mind, we still have gaps lower down there that could potentially come back and get filled in the very near future. As we look over here on the 4-hour chart, MACD indicator slowly working its way down towards the zero line with a bearish cross of the two lines. Now, if we can crack below this high volume node, which is in the middle of this consolidation, then we really open the door that we're going to likely go ahead and at minimum start testing the bottom of the consolidation. We breach the consolidation, then we want to go back and we want to refer over to the daily chart where the measured move would be for the consolidation breakout, along with the Fibonacci retracement levels. Now, if we come over and look at the 30-minute chart, on Friday, we formed a B as in boy shaped profile. So we had that push down, we consolidated. Are we going to get ready to break and continue lower? On the 30-minute chart, the MACD indicator is still cross bearish, but you can see it's starting to try to flatten out here just a bit. I do think we probably make it down towards the zero line, which would imply that there could still be a little bit more selling to take place. Now it's going to be critical. Do we just simply come down towards the high volume node and bounce back up? Or can we actually flush and go all the way down towards the lower portion of that consolidation area? Now note, if we are trading above value area low on Monday, I want to look for higher prices unless this occurs. And that is going to be, we break above value area high, which is about 626.84. Then we start coming down. At that point, I'd want to target the point of control. I'd want to target value area low. I want to target that high volume node over here on the daily profile at a price point of about 624.24, then the bottom of the range, then the 100% of the range about 609.32. Then see, can we hold runners and potentially make it all the way down, fill in the gap? Now, one thing I want to mention, even if we were to come all the way down here and fill the gap over here, undo everything we've had for the last couple of weeks, that still would do nothing in terms of destroying this trend up that we've had. That could just turn into a much larger upper level consolidation in the markets. Now, before we come over and look at the futures markets real quick, something else to consider. We are in earnings season now. This week, more specifically on Wednesday, notice we have Tesla, we have Alphabet, we have IBM, we have Chipotle, to name a few. And then on Thursday, we have Intel. On Tuesday, we have Coca-Cola. And if we come over and look at the big expected movers out there, on Wednesday, ServiceNow expected to move plus or minus 8.5%. Tesla expected to move plus or minus 7.5%. IBM and Chipotle right around 6.5% or so. But if we start seeing some of the tech companies start to miss earnings, could that be what starts to get us that pullback on the S&P 500 and the NASDAQ? Now, when we come over and look at the futures markets real quick for the S&P 500, let's start off look at the weekly volume profile. You can see we closed below value area high, which comes at around 6341.25. Point of control 6333.75, with value area low being about 6293.75. Now, this is going to be an area I do most certainly want to pay attention to. We call this the minus development area. And when we look at this, the upper part of that zone is going to be about 63.23. The bottom of the zone will be about 63.16. The first time we come into it, what do we expect? The market to bounce out or consolidate near that area. But something we got to ask ourselves, is this one touch, two touch, and now we're going to flush the next time we come down there, potentially getting a rotation all the way down? If that's going to be the case, we can also target some of these high volume nodes on the profile as the market tries to rotate lower. Anything below value area low, I want to turn my attention towards some of these high volume nodes, 6268.75, then down here about 6236. Now, let's say earlier in the week or any time in the week for that matter, we start trading above value area high. I then want to go ahead and target new all-time highs in the market. I want to see, can we go ahead, retest the highs and potentially continue to push much higher? Now, from a Fibonacci standpoint, if we were to grab our Fibonacci retracement from the low of last week, all the way up here towards the high, aka all-time highs, notice that 38% retracement is just below where that minus development area is. Now, as the market starts to pull back, we want to see which Fibonacci level it stops at. Then does it bounce and try to come back up? Because if indeed we start to form some type of A to B equals C to D pattern, in this example, I'll even pull it all the way down to 61.8. We got to have price targets 64.02. If we stop at the 50% level, we have a price target 64.15. And if we stop right around the 38% level, we'd have a price target of 64.28. But note, with the ABC pattern, the pattern is not validated until we take out the swing high right up here, which is also all-time highs. Now, as we come over and look at the daily profiles on the 30-minute chart, what do we have taking shape? Well, one, we still have a point of control way down here at 62.83. Now, could that get hit on Monday or Tuesday? Yes, it could. And I want to take it one step at a time. I would not want this to be my primary target. Instead, pay attention to Friday's low. Do we break the low? If so, there's probably going to be some stops hanging out down here, and that would fall right within that minus development area. This shaded area is the area that we just drew out over here on the weekly charts. This shaded area is the area we drew out off the weekly charts. Now, note, if we do start breaking below value area low, 63.25 then we start coming back up above it. I then would want to target the point of control, 6333.75. Then value area high, 6338.75. Anything above that, then we're really looking to target this distribution area right here. Somewhere in the ballpark, 6346. Then above that, all-time highs in the market. Then we'll see, do we have an ABC pattern setting up? And we'd have to use the ABC targets for any point above all-time highs in the market. But note, right above value area high, we have a minus development area, 6339.75. The first time we come up into it, the market may get smacked right back down. So pay very close attention if you are trying to target that upper distribution area. Now, before we come over and look at the NASDAQ real quick, let's take a look at the economic calendar for next week. Sunday night, not a whole lot going on. Monday, no major economic news. Tuesday, we have Fed Chair Powell speaks, Richmond Manufacturing Index. Wednesday, we get existing home sales. Thursday, we're going to have some PMI numbers along with new home sales at 10 a.m. Then on Friday, core durable goods and durable good orders. So all in all, I'd have to say it's a kind of a light week out there next week. We come over and look at the dollar index real quick. On Friday, we see a hammerish looking candle right back in that weekly zone. Notice also the MACD indicator is still extremely strong out here on the daily chart. And with the dollar going up, what do we think gold is doing? Gold on Friday was still able to go up about 13 points. And one of the areas I'm watching, can we complete the ABC pattern at 34.17? If we can get above that price point, gold will probably make another new all-time high. However, if we start breaking down below 32.90, then that will be the invalidation point of that ABC pattern on the way up. We also want to keep a close eye on the 10-year yield. We still have this larger ABC target up here, about 4.86%. However, the invalidation point for that pattern will be down here at 4.12. So on Friday, it was down a little bit. And if you're a bull in the market, you want to see the yields lower. Lower yields normally is favorable for the stock market. However, another little warning sign real quick before we jump on the NASDAQ, take a look at crude oil. Crude oil, once again, on Friday was down $1.49. And the reason why I say pay attention, when crude oil is weaker, that is a clear indication we have a slowdown in the global economy. Less demand for crude oil. It'll only be a matter of time before the economies start to show that in some of the data coming out. Now, if we come over and look at the QQQs real quick, we start off looking on the weekly chart. You can see we made another new all-time high. A little bit of a wick on the top, a little wick on the bottom. MACD indicator on the weekly chart still extremely strong, showing no signs of weakening at this point. If we start to get a pullback, I would want to watch these two high volume nodes. First one coming in about 529.99. The second one about 521.78. As we come over and look at the daily chart real quick, since we made a new all-time high on Friday, we got to grab the Fibonacci retracement up. Now, at some point, we will get the pull back. The first area I will be watching will be that 38% retracement about 549. However, there could be some stops along the way. And I want to look at this high volume area as a potential area if indeed we do start to get a pullback underway, 555.92. Look at the MACD indicator. As price continues to make new highs, the MACD indicator is simply not confirming those new highs at this point. Then on the 4-hour chart, we also have a bearish cross to the MACD lines, slowly making their way down towards the zero line. And the first stop would be here about 556.08. So if we start to see some weakness out here on Monday, watch out, because that last 4-hour candle ended up being an inside day, which means we're likely going to get a breakout or breakdown from that candle. Then on the 30-minute chart, MACD indicator still has a bearish cross, and the MACD indicator lines working down towards the zero line. Now look at the volume profile shape. We have a B as in boy. I have been putting together a volume profile series, and just yesterday I released video number 4, where I share with you guys how to trade the different shape volume profiles. But with this B-shaped profile, we had to push down. If we start breaking below the lower portion of this distribution, watch out, we're probably going substantially lower, and where that could be, all the way down towards the lower third of the range from that P-shaped profile at about 558.27. Now, if we can start clearing really above this distribution area of the profile, then I would expect to see us run back up towards the upper third of the range, 562.35. Then above that, all-time highs in the market. And then hold your nose, how high can we go? Now, as we come over and look at the NASDAQ on the 4-hour chart with the weekly profiles, you can see that value area high is up here at 23,283.75. We're going to have the point of control about 23,256 and a quarter, with value area low being 23,029.75. Now notice, as long as we can stay below this distribution area of the profile on the weekly, I want to look for lower prices. But in the event that this week we go ahead and we run and break above value area high or even all-time highs, and we start coming back down, I would then want to target the point of control. Then any of these other distribution areas of the profile we can use for additional targets as we try to play the market all the way down towards value area low off the weekly volume profile. Anything below that level, I would then want to turn my attention about 22,937 and then all the way back down towards the lows of last week. Last week, the range did expand to about 517.75, where the prior week was only 332. Now, as we come over and look at the daily profiles real quick on the 30-minute chart, you can see a majority of the volume was built out at the lower end of the range. And if we start breaking below that area, watch out. We're probably going to see some stop loss orders below that price point. And we do still have an untested point of control down here, about 22,985. Now, I'm not saying we're going to make it all the way down there in one day, but let's just role play this out real quick. From the closing price on Friday down towards that level, that is right around where the average daily range is right now. Now, I'm not saying Friday's closing price will be the high for Sunday night or even Monday. I'm just making a statement. Now, if we do start breaking below this area, I do want to look for a little bit of a push on the way back down. And one of the areas I would want to watch, look right over here on the profile from July 17th. We have a small minus development area somewhere in the ballpark of 23,060. Now, looking at the daily profile levels, value area low, 23,180. The point of control, 23,215.50, with value area high being 23,250.50. So in the event we break value area high and we come down, I want to play point of control. I want to play value area low. I want to push runners all the way down towards that minus development area right over here, which we just spoke about. But in the event we do break above value area high and we stay above it, I want to then look to retarget all-time highs in the market. Then from that point on, we're in no man's land. Hold your breath and see how high we can go. Now, if you want to try to role play out where some targets could come into play, first, we got to see how low is this retracement going to be? Is this all the retracement we get? If it is, then we could grab our Fibonacci extension tool, measure A to B, B to C, and we would have a price projection at about 23,650. As we start coming back down, maybe testing out some of the other Fibonacci retracement levels on the way down, we'd simply have to drag that down. Now, we'll keep up to date with that on the live stream. So hopefully you will join me on the live streams this week. But if you guys would like to learn how to trade the volume profile shapes, and more specifically, the uppercase B, then you may want to go ahead and check out this next video right here.